Thanks, Concordia. I commend Deputy Michael McGrath for tabling this motion and thank him for the considerable amount of work he has carried out to date on behalf of the beleaguered variable mortgage rate holder. Fianna Fail has been trying since July 2015 to take the banks to task on this subject of rip-off variable mortgages, and I welcome the opportunity to contribute to this long overdue debate. Currently, there are over 300,000 households who are on standard variable rate mortgages, collectively owe €40 billion. While the recent reduction by some banks of their rates is to be welcomed, the interest on some variable rate mortgages in Ireland still stands at around 4.5%. This means that a customer on an existing variable rate mortgage over 20 years is paying up to a minimum of €1,500 a year more than the offer available to a new customer and €6,000 more a year than a customer with a tracker mortgage for the same amount. And for all that the banks have been advertising and promoting switching of mortgages, the reality is not so simple. With extensive legal fees and loopholes attached to such transfers, the banks are very vocal in their offer of cashback or assistance with legal fees in their bid to attract new customers, but they are doing absolutely nothing to help existing mortgage holders make the switch. There is a clear case for the Central Bank to introduce a statutory code of conduct on mortgage switching, similar to the code in place for switching a current account from one financial institution to another, which has proved successful. A statutory mortgage code that clearly sets out the obligation of the financial institution, protects the rights of the mortgage holder, and is urgently required. The bank's refusal to budge on variable rates and offering reduced fixed rates to existing customers is another inadequate response, and it is not sustainable for the large number of customers. Locking customers into what is only a marginally reduced rate for periods of between 2 and 5 years means that these customers have been excluded from any potential rate reductions or from availing of lower rates from new entrants to the market. Additionally, it has a significant impact on home owners trying to sell, as they would not have to incur penalties to break from fixed terms. It is simply unfair to expect customers already being squeezed by excessive variable rates to accept that fixed-term rates are the solution. In most instances, the monthly mortgage is the most significant financial outgoing of a homeowner, whether that is a family, a couple or a single individual. In most cases, these homeowners have been left to look on in frustration and distress as to see the mortgages unchanged while rates have generally fallen. Mortgage arrears are now a distressingly high level, and the human toll has been taken on hard-pressed families and individuals have been devastating. Excessive variable mortgage rates are without doubt linked to record levels of mortgage arrears. A 2012 Central Bank report concluded that high variable rates continue to exert upward pressures on arrears. Banks' engagement with those in mortgage arrears have been piecemeal at most, and again, the solutions offered are entirely inadequate. Variable rate mortgage customers are now on interest rates that are 3 times those being paid by tracker mortgage borrowers. While we recognise that tracker mortgage borrowers represent a significant drain on bank loan books, it is not an acceptable reason to rip off standard variable rate customers. The bill before the House is designed to give the Central Bank new powers that would have the effect of reducing monthly repayments for many of the 300,000 standard rate variable customers. And it also will give comfort to the 46,000 loans which are in the hands of non-banking lenders. This bill is a necessary response to the complete failure of the many lenders to pass on lower interest rates set by the European Central Bank. While increased competition in the mortgage market, which seems to be the solution on offer by the Minister for Finance, is to be welcomed, it is again a wholly inadequate response. I welcome the measures outlined in this bill, as we have many of the homeowners I have been speaking to in my constituency of Kildare North are anxious to see tangible and viable solutions to the problem of exorbitant mortgage repayments. People have suffered enough at the hands of the banks. We have an opportunity to make a difference to thousands of hard-pressed mortgage holders. I would urge, therefore, that the bill be passed to committee stage with a view to all stages being completed and the legislation being put in place as soon as possible. Thanks, Concordia.